So good afternoon, everyone, and welcome to today's Fireside Chat with Josh Goldberg, CEO and co-founder of Sunstone Credit. As most of you know, I'm James West. I run the Sustainable Technologies and Clean Energy team here at Evercore ISI. Sunstone has built a best-in-class technology platform and partnered with leading financial institutions and a national network of solar developers to provide small and medium-sized business borrowers access to simple, affordable, and easy-to-understand solar loan products with flexible terms and a streamlined application process. Josh is the CEO. He spent the last 15 plus years founding and operating businesses in the solar installation, development, and financing space, including Astrum Solar and Sunlight Financial. He also co-founded Legends of Learning. Having been a solar installer business owner himself, Josh is passionate about supporting both Sunstone's solar development partners and the commercial customers they serve through their mission. Josh started his career as an M&A lawyer. So Josh, thanks for joining me today.
Thanks for having me. I'm very excited to do this.
Absolutely. Well, maybe you could share with us the origin story of Sunstone Credit, and partially if you could also elaborate on your investment in Sunlight Financial as part of its restructuring process.
Sure, I can give you a kind of my origin story. So for me, it all goes back to my first entree into solar, which was a residential solar installation business called Astrum Solar. We started it with two friends in 2007, 2008 in Maryland. At the time, Solar City was just getting started in California. And we saw an opportunity to build a professional business in the space. And if you go back in time in solar, we were buying modules at $450 a watt. Just the cost of the module. Wow. Suntech modules, and modules are now what, like 20 cents a watt, and Suntech's long out of business. Right. And customers were paying cash and buying systems at $10 or $12 a watt. And the deal was actually pretty good because there was a lot of state incentives back then. And so that business started with cash customers. There was no financing. The next evolution in residential solar, which kind of came from Sun Edison in the commercial space, was TPO, lease, third-party ownership, right? And it was, hey, we can get rid of the large upfront cost of solar by leasing it to you, and you can basically pay for it over time. And at Astrum, we did a lease with Constellation Energy, the utility at the time. It was kind of the first utility-backed solar lease. But I always kind of thought that it was pretty stupid if you owned a house, you go solar to get rid of your utility, yet by leasing a system, you just create another utility on your roof. Right? Like you haven't actually gone energy independent. You're just buying power from somebody else. But that was kind of like the best of the options back then because solar had a big upfront cost and there was no financing available for it. And so the origin of Sunlight Financial, which I co-founded with a few other folks, was we thought at Astrum that most homeowners wanted to own solar. But they used a lease because there was no other option. So I said, hey, if I could convince someone to give our customers a 20-year loan, which mirrored a lease in terms of tenor, they would rather do that. And so I partnered with a private equity firm called Hudson Clean Energy at the time, and they offered a loan to our customers. This was a loan from Hudson to Astrum Solar's customers, and the program launched early 2014. And very quickly, we saw that all those customers that were leasing before, the vast majority of them switched to a loan. It was just kind of an obvious way to finance it. And so, I like ranting about things. One could argue that the origin of Sunlight Financial itself wasn't like a rant of mine. Like I wanted a better solution for my customers because I didn't think that lease or PPAs made a lot of sense. And I think the market ultimately played that out. So we sold Astrum Solar in 2014 to Direct Energy, which at the time was owned by British Gas. Now it's owned by NRG. And I went to the folks at Hudson and said, hey, this program that's working really well between you and Astrum, what if we spun it out and did a company that funded loans for every solar installer, right? And that was the origin of Sunlight Financial, whose business model was, on one end, partner with financial institutions, other end, partner with installers, and offer loans to consumers. That business went public in a SPAC deal in 2021. I'll kind of get to the middle of the story now. So I was actually out of solar. I left Sunlight around 2017, 2018, and was working on something completely outside of solar. And COVID hit, and I was sitting at home. And one big thing we always ran into at Astrum Solar was we would sell solar to a homeowner. If you think about who actually owns most commercial property in the United States, it's people, right? Now they may own a large real estate company, but at the end of the day, they're a person that has a house that might put solar on their home. And so often at Astrum, a homeowner would say, hey, I love the system you put on my roof. It's phenomenal. It's cool. I'm saving money. I like it. The economics are great. I also own commercial property, retail shopping center, storage, office, whatever it is. Can you do the same thing for me? Right. And, this is 2014, 2015. And the answer was like, yes, we absolutely can. And the good news for you is it's an even better deal because the system costs are lower, the power prices are about the same, and you can depreciate the asset. And they're like, well, what's the catch? The catch is there's no financing. So if you own, Josh's Tire and Auto Shop and you want to put solar on the roof, you got to write a $400,000 check. And most businesses don't want to do that. So commercial solar market's kind of always been limited by like lack of financing for ownership. And occasionally we would get someone who owned a big enough property, maybe Walmart was a tenant, and we'd say, hey, like maybe there's a third-party solar developer out there who will come in and put solar on your building's roof, maybe pay you some rent and sell power to your tenants. And that works for a segment of the market, but for a lot of property owners, they're like, no, no, thank you. Like, I don't want someone else on my roof. I don't want someone interfering with my landlord-tenant relationship. Like, I'll pass, right? And so if you fast forward to 2021, I'm sitting at home and saying, hey, like this the commercial solar market, the small and mid-sized commercial market, kind of like the non-rated credit market, has never really taken off. And the reason why I thought was lack of financing. And so the origin of Sunstone was, I thought there was a huge opportunity that if we could provide loan financing for property owners to purchase solar and finance it themselves, that we could help that market take off, just like loan financing helped the residential solar market take off. And so at Sunstone, what we do is we partner with financial institutions. We craft unique products designed for the commercial solar space, unique underwriting methodologies designed for non-rated credits. And we offer that financing through a network of almost 500 installers all across the United States today to business borrowers. We launched the business in 2021, started originating loans in 2022. So that's kind of Sunstone. And we partner with 3 banks right now: Cross River Bank, a bank called Forbright, and M&T Bank to finance our loans. It's a long-winded thing. Do you think about Sunlight? So Sunlight,
Yeah.
I don't know if you guys covered Sunlight in your coverage. Hopefully you didn't tell anyone to buy the shares because it went from 10 to 0.
We didn't.
Good. Yeah. It wouldn't end up well for didn't end up well for me. So Sunlight was a consumer loan company, and like a lot of consumer loan businesses, both in solar and when outside of solar, got crushed by interest rate risk because loans get originated at a fixed price. They get sold at a later time. As rates go up, if you're unhedged, you can lose money. Kind of like a t-shirt business where it costs you more to make a t-shirt than you can sell it for. And so they ran into financial trouble. It was a business that I knew very well, having co-founded it. And Cross River Bank was was their senior secured lender. They're a partner of ours. And so we looked at it and said, hey, if this business were fixed and it were run better, there's a lot of value that could be untapped here because we're still big believers in the residential solar market. And I thought that we had the unique expertise to fix it. And so we partnered with a few of the members of the management team and Cross River to take that business private through a prepackaged bankruptcy sale. And now Sunstone is the majority owner of it. It operates independent from Sunstone. So we have a residential solar loan arm and a commercial solar loan business. But Sunlight still operates under the Sunlight name. So I think just the opportunity in the space, like with rising interest rates, there's been a lot of businesses that have hit a hard time, and it's kind of figuring out what has lasting value and what doesn't. So sorry, that was my long-winded answer to your question.
No. We just had a question come in from the line, so I'll go ahead and fire away with this. And I don't think I mentioned it at the beginning, but anybody that has certainly questions for Josh, please do drop those in the Q&A box. I'll make sure to get them over.
I don't censor well. I'll cover anything. So go ahead.
Exactly. So any question on any topic you want to ask, Josh will answer it. Yes. The point you brought up about property owner versus business owner who wants to install solar, do you deal with property owners then, not the business owners, to install solar? And how does this dynamic work given the landowner might not want to install solar versus business owner that on that property that maybe does?
So in most of our cases, our borrower either owns the property or the property company is a guarantor. We will do loans to long-term tenants, but we do require landlord consent. Obviously, like you can't, if you don't own the property, you barring some unique provision in your lease, you can't put solar on it. But yeah, I mean, I think what we've seen is property owners are inherently lazy. I mean, property ownership is a passive investment for a reason. But what they care most about is net operating income, right? And so if they can own solar and
Right.
finance it and increase net operating income, that's very attractive to them. It just has to be simple. And so, one thing that we spend a lot of time with our installation partners on is figuring out how to make it as simple as possible for a property owner to go solar. But a lot of our borrowers are owner occupied properties. A lot of them are investment properties that have tenants and maybe they're gross leases, in which case solar savings is great. We're actually seeing a pretty interesting trend. If you think about property ownership over the past 10 years, it was pretty easy, right? Because interest rates were basically zero, rents kept rising, which meant cap rate multiples kept growing. You could buy a property, literally do absolutely nothing to it, and sell it 4 years later, make a bunch of money, right? Now you're in an environment where interest rates are rising, so your cost of ownership is increasing, your cost of maintenance and everything else is increasing, and you really can't raise rents. So I think smart property owners are saying, how can I generate extra cash flow off a property when I can't do those things? And a lot of times, especially in good solar markets, a property owner can buy a solar system, borrow the money from us, provide power for their tenants as a service, provide savings to their tenant, and make money on that spread between our cost of financing and what they can sell power to their tenants for. And it's kind of a win-win because the tenant saves money and they generate extra NOI, and it's green and all the other stuff too, plus the tax benefits. It just, like, property owners are generally not like early adopters of stuff. And so I think it will just take some time for this trend to grow.
Got it. Okay. And what do you think the total addressable market is here for you guys, and why is the medium-sized commercial segment so important for Sunstone?
I mean, I think the TAM here is north of $1 trillion. It's commercial properties, it's nonprofits, farms. We actually do a lot of loans to HOAs, which are, while you might think them as homes, they're actually commercial entities that actually operate these facilities. There's just so many folks who are looking to fix their power costs and to save money. So I think the TAM is quite large, and I think for us the market is really kind of like non-rated credits, right? So like we're not looking to lend money to Walmart. I mean, I would happily do it, but they don't really need our money, and they can get solar elsewhere. But it's all those properties that are held by private individuals, owner-occupied businesses, where they don't want someone to own solar on their roof. It just doesn't make sense for them. They want to own it themselves, and they just need financing. But if you think about most solar developers out there, they don't really do underwriting. Like, you don't need to know how to underwrite anything to put solar in a Walmart, right? Like, Walmart's going to be around, or University of Maryland or federal government, whatever it is, right? So that's like project finance. We are not a project finance company. We are a lending business, right? We lend money to property owners just like regional banks do on folks, and we underwrite that property owner, that business.
So we've got a couple more that have come in from the line here. Is your loan rate higher than for those that it is for resi solar, and do you experience the same issues with the small, medium-sized business market as resi solar is experiencing now due to rate changes?
Great question. So our rates, I would say, are probably comparable to the resi market, give or take. I mean, it depends a little bit on who our borrower is, but in general, like commercial, think of our cost of capital like commercial mortgages. So it has definitely gone up like everyone else has recently. I think we're not as big. I mean, we're new, right? So I can't tell you that like our business is down from 2020 because we didn't have any business in 2020. But what I can tell you is I think the commercial market has been a little bit less sensitive to rising rates because of the depreciation benefit, and in some cases from some of the adders you get in the IRA. So the deal is not as good as it was maybe a year ago, but our rates have gone up, so cost of capital has gone up. Solar module prices, as I'm sure you cover a lot, have gone way down. Power prices, especially in the commercial sector, have increased. So there's kind of like some headwinds and tailwinds all at the same time. A bunch of our borrowers can get an extra 10% tax credit in many cases, which helps. So our business grew 4x from 23 to 2022, and we hope to grow at a similar pace.
Okay. Got it. A couple more questions came in from the line here. How do you deal with the red tape and bureaucracy of utilities, the long time it takes to plug a commercial site into the grid, and do you see customers who have electric vehicles be the target customer?
Great question. So we only finance behind the meter. So we don't get into a lot of the in front of the meter stuff, which can just take forever. So we don't. I mean, we sometimes see delays, but generally that's when our, like, we aren't the developer, that's our installer partner. Generally our average project takes 6 to 9 months from kind of like, loan doc signing to completion. Obviously some utilities vary depending upon size, but like things are getting done. And I think there it's just about setting customer expectations is, I think, really important. And what was the second part of that question?
Right. It was, sorry, I just lost it here. Where did it go? Oh, it was about EVs.
Oh, EVs.
Do you
So
see like, let's go through the please.
it's a great question. So about 85% of our loans right now are pure solar, and about 15% of them add EV charging and or storage. And so look, I mean, office is a really tough sector right now for anything, but like if you think about the future of office, like at some point, like suburban office will have EV charging because people that park in the parking lots have electric vehicles, right? And so there's a need for property owners to finance that, and so we do finance that stuff. The grand vision for Sunstone is, if you think about our business today, it's financial institutions, craft products, solar installers, business borrowers, mainly for solar and storage. But really that model can work for any commercial energy related product. Could be commercial HVAC, it could be standalone storage, could be a lot of different things in the future. We want to be
Sure.
we kind of want to be the engine that finances the energy transition for small to mid-sized non-rated commercial business owners, property owners.
Got it. And so can you describe how I guess the loans are, or why loans are a better solution for businesses looking to go solar versus leasing, and does it ever really make sense to lease solar?
Yeah, it's a good question. They're definitely different, right? So if you own your own commercial properties, and you have your relationship with your tenants, I think most third-party developers would come to you and say, "Hey, I'll pay you some rent and put solar on your roof, and then I'll sell power to your tenants." But if you look at like the cost of capital for that developer plus their margin, the developer's actually extracting a lot of the margin off your roof, right? At the end of the day, the roof is the valuable asset. Like you have a good roof and a good off-taker of the power. And so what we hear all the time from property owners who use our financing, we financed a large portfolio in California recently, and I was talking to the owner and said, like, you must have been pitched in San Diego, you must have been pitched solar every day for the past 10 years. Why didn't you do it? He said, I never wanted anyone else on my roof, right? Like you own the real estate. You have the tenants.
Right.
Introducing a third party to your roof can be very, very complicated, and a lot of the margin gets extracted. And so if it's all about using tax benefits and getting extra NOI, if you have the right financing and you own the property, why introduce a third party into your landlord-tenant relationship? And why have someone else extract the value? That's our belief. Now, there are plenty of use cases for third-party ownership. Like if you're a publicly traded REIT, maybe you can't use tax benefits. Maybe you don't want them on your balance sheet because the GAAP treatment of solar is really weird, right? Maybe you want to just do it because your tenant is Walmart and you want to make them happy and you don't care, and you're fine getting a couple extra pennies a square foot of rent from a solar developer. So like that's how the market got started. But I think that for the vast majority of property out there, by number of properties, people are better off owning solar if they have the right financing to do it. That's kind of my view. But both markets are huge, right? Like the market penetration for commercial solar is, I think it's like 50,000 buildings in the US. It's nothing, right? Like take off from any airport and look down, you see tons of, you're like, oh, like one solar system, right? So the market for both is absolutely huge. And I think third-party ownership tends to make a lot more sense for like large community solar, and again for like large public companies like the FedExes of the world who just want to save a little bit of money and don't want to actually own the asset.
Right, right. And has the IRA, the Inflation Reduction Act, had an impact on your business, or noticeable impact on your business? I know you guys are fairly new, and it was kind of being put in place as this happened.
Yeah, I mean, absolutely. I mean, we started the business before the IRA, but I think the long-term extension of the tax credit, I think, helps us attract new financing for our partners. Because if you're a financial institution launching with us, you're not doing it to launch a percentage of our volume today, right? Because we're relatively small. You want to grow with us. But when the tax credit was going to start dropping, there was always this looming question of like, is this business actually going to grow, or is it going to kind of cliff off with the tax credit, right? And so the tax credit extension, I think a lot of financial institutions say, hey, this space is going to be around for a while. I'm actually now willing to deploy capital and focus time on it. So that's been one huge boon, right? It also helps with things like raising money. We are a venture-backed business and all that other good stuff. The other really interesting thing for us is the cash grant in lieu of ITC for nonprofits and other entities. Like there is a huge untapped market of religious institutions, private schools, small municipalities who have wanted to go solar for a long time, but it was effectively 30% more expensive, right? Because they couldn't use the tax credit. And now they can. And so we're seeing a large influx of those kind of entities, which is great, right? Because it's, in theory, everyone should benefit from solar. So that was a nice boon. And then obviously you have some, 10% adders here or there. There's still a bunch of uncertainty out there about the regulations out there. But yeah, I mean, it's been a really big boon. And I think, it's been partially masked by rising interest rates. But I think, were it not for the IRA and with rising rates, we would have been in a pretty tough spot as an industry in general.
Got it. So we had a couple more questions, or three more questions come in from the line.
People are actually listening to
one
this.
very specific. People are listening and they're asking questions. This is crazy. So the first one's very specific. Do you guys provide loans in Puerto Rico?
We do not currently provide loans in Puerto Rico. That is a different regulatory animal. Would love to get there at some point. I don't know if you guys share my email on this at some point, but happy to provide it and talk to you about it.
I'll drop your email address in the replay email that we send out. And then another one is NEM 3.0 an issue for businesses in California, or is it only resi? And if there is a NEM structure, or what kind of NEM structure does exist, if there is one?
NEM 3.0 is a total cluster. Not as bad, I think, for commercial as resi, right? Just absolute terrible policy making by people who shouldn't have jobs. But in any case, I mean, for resi, where a lot of homeowners get to like 70 to 100% of their usage, there can be a massive difference between NEM 2.0 and 3.0 just because of like time of use and all that stuff. And I think it's very hard for your average residential solar salesperson who's doing a one-call kitchen table close, to explain to Mr. and Mrs. Goldberg, my lovely parents, about time of use and peak shaving. They don't care about that stuff, nor they want to learn about it. So I think that's been very confusing for resi. In commercial, most systems don't produce as much as a percent of their power, so you have less like surplus power to worry about. And I think because the deals are bigger and it's not like a one-call close, like it's actually like a more consultative sale process, it hasn't had as big of an impact. But it's definitely out there, and it's something that, one of the things that we're very careful about as a lender is we want to make sure that our borrowers get the deal they thought they were getting, right? And so we do spend time looking at the proposal from our installer to the borrower, make sure, hey, like you're actually quoting them 3.0 properly, because what you don't want is a borrower who thinks they're getting full value for 100% of their power. It turns out that isn't the case. They start pointing fingers at everybody, and then they don't want to pay their loan, right? Because they didn't get the deal they thought they were getting. So it's made it a little bit more tricky. I think not as big of a deal for commercial as for resi, but just terrible policy in general.
Yeah, I totally agree. And I'm not surprised you said that, and you are right, they shouldn't have jobs. I guess along with that, NEM, are you pushing your customers, or I guess the installers, are pushing more storage solutions as a result of that?
We don't sell solar, so we don't push anything, but we saw an uptick in storage in California. Almost all of the storage that we finance is in California, a little bit in Texas and a couple of Northeast markets, but California is like that. That's where most of the actions for us, at least.
Right. And then I think because you said you'd answer anything, we got a technology question here. How do you feel about vertical solar arrangements, and have you explored this as a viable or more effective solution?
Like vertical, like on a vertical wall?
Yeah. I think that's what the person did.
I was Astrum Solar's first solar salesperson, and I sold a vertical system in 2009, and I came back, and my co-founder, who was like our head of you sell? It's like a roof, but it's just vertical. No, I mean we really haven't done anything. Like we'd happily look at it if it makes economic sense. I mean it can work.
Right. So kind of, are there any specific eligibility criteria the customers need to meet to qualify for solar loans, or what are the specific criteria?
It's a very complicated, magical black box credit score built by unicorns. I
Right.
mean, if you think about things that we care about, like, is the business profitable or is the property profitable, right? Like if you're a borrower of last resort, we're not going to finance you. On smaller deals, we do rely on personal guarantees. So we look at both the business and the individual. On larger deals, it's
Mhm.
just purely the business. Things like how long have you been around? So if you just started a business last week, you're probably not the best borrower for us. But I think like the average age of our borrower is like 10 plus years, but we will do newer borrowers. And so just like how stable is the business? Is it going to be around for a while? To pay the loan off. And I think when you look at small and mid-sized properties, like there's a lot of them out there. I mean, like no unique asset classes. I think we finance things like retail. We do office buildings. I mean, not urban because urban buildings are tall with no roof space, but um, HOAs. We do nonprofits. We do multifamily storage. I mean, it could really be anything.
Yeah. I mean, are there any industries that you avoid financing?
We don't currently do marijuana or firearms, and that's probably more a restriction of our financial institution partners than anything else. And
Got it.
anything like
Okay.
gambling related, that tends to be like an anti-money laundering issue. So if you own like a
Right.
lottery parlor, like we're probably not your best option.
Gotcha. Okay, that makes sense. And then can the customers choose their own solar installation providers, or do you have the preferred partners for installation?
Yeah, so we have a network right now of about 500 installation partners. All of our deals come through those partners, right? So we don't generate leads, we don't sell solar, we just finance it. We constantly
Right.
approve new partners. So if you use one of our approved partners, that's fantastic. We love them all, but there's plenty of folks that we sign up one or two every day. So if you are out there and you have a partner and they're not approved by us, have them apply. We look to approve partners who
Mm.
do high quality commercial work, right? So if you are a great residential solar installer, are we going to provide you with a loan for your customer on your first $3 million deal? Probably not, because you probably don't know what you're doing, right? So like, what's your experience in
Right.
commercial? How good are you at doing it? And then we want to make sure that you're going to be around for some period of time to honor your warranty. I think in the residential space, a lot of homeowners run into issues with like brand new solar installers, kind of like fly by the night. They're promised something,
Right.
whatever they were promised didn't come to fruition. Then they don't want to pay their loan or the PPA, whatever it is. And that's just something we just want to stay out of that. We're a little bit more a little bit more parochial on making sure that our borrowers get a good deal.
Right. Got it. And how do you handle maintenance and warranty issues for the solar systems that are financed through your loans, or
Yes,
do you at all?
it's a great question. At the end of the day, that's the borrower's obligation. We do have
Mhm.
certain minimum eligibility requirements. So we only finance the approved equipment, which is pretty common in the TPO space. So we want to make sure our borrowers get, high quality tier one modules and good inverters. So that's kind of like to make sure that there's a minimum
Mhm.
warranty on the equipment. And then we actually do require that our installers provide our borrowers with a minimum warranty, a workmanship for a couple of years. So we do require that. But at that point, it's on the borrower. One thing that we do also require is that when we underwrite the deal, we make sure the borrower is aware that there may be some maintenance costs in the future. Like solar largely is maintenance free, but you can have some maintenance costs, right? And so we don't want there to be a situation where the borrower has no expectation of maintenance, and in year 5 there's some cost, and then they're like, "Well, I can't afford this, so I'm not
Mhm.
going to pay my loan." So again, on the borrower, but it's all about making sure the borrower kind of gets the deal they thought they were going to get.
Right. Right. Um, Another question from the line here. Do you have a view or interest in expanding into some of the niche product markets like energy efficiency products, HVACs, appliances, other, and or state-based company financings where they have rebate programs, et cetera, as we started to see with the
Definitely
got expedited.
commercial. Yes, to some of those, definitely commercial HVAC. There's kind of a fine line between like focus and drinking from the fire hose, and so like we're very focused on solar
Right.
plus today, but look in the next few years for us to add new products. I think a lot of business, like if you're I'll use Josh's tire and auto shop. If he's got a commercial HVAC unit and it needs to get replaced, there is no good financing for it. You have to kind of refinance your mortgage or maybe get like an SBA loan, which is really clunky. But if you're a homeowner and your HVAC unit breaks, when that HVAC company comes out, they've got financing for you, right? Because they know that you probably don't have cash on hand or want to spend cash on hand for that upfront cost. And so I think there are a lot of things where if a business borrower had financing, they could save a bunch of money in the long term, maybe by replacing their roof, by replacing that old HVAC unit with a more efficient unit, but they need financing for that upfront capital cost. And going to their traditional bank is just way too complicated. It takes way too long. Nobody wants to go, no offense to any bank out there, but like getting a mortgage or a more commercial mortgage refi even is like a 6-month process, and it's like getting a root canal. And most people just
Yep.
like they'll do it if they have to for their property, but to do it for solar, it adds too much friction to the process. And so what we hope to do is we want to reduce friction. So you want to sell that solar system, we reduce friction. You want to sell an HVAC unit one day, we'll reduce friction, right? You want to put in a standalone storage, whatever it is, we can reduce friction on that too. And if some genius at MIT invents some new product 5 years from now that has an upfront capital cost with defined savings over time, we'll want to finance that too.
Okay, got it. And then could you talk a little bit about your loan portfolio mix? And I think you already touched on this, but the growth that you're anticipating.
So we've been originating loans for a little over a year and a half now. The portfolio is approaching about $100 million. We're closing on $1 billion of applications. There's obviously a lag from when we approve something to when it actually enters the portfolio because it's funded. And just to give you a sense, I've got some data here. I mean, we've done real estate, agricultural is a big one. We've done tons of manufacturing, HOA and multifamily, storage, retail, warehouses, healthcare, hospitality, medical office. These are all things that we've done plenty of, and just lots of different industries all across the US. So about a quarter of our business is in the Mid-Atlantic and Northeast. We've done a bunch out in California. I think we've done loans in 32 states. So, you tend to see more concentration where there's just more solar. So like New Jersey is a very good market for us. But I think commercial solar pencils in a lot of, I mean, we've done loans in Missouri and Wisconsin and in Illinois and Texas where solar pencils quite well.
Right. And then could you maybe talk about the competitive landscape that you see and how what your unique value proposition is? I think it's the simplicity, quite frankly, but there may be more that you want to add to that.
Yeah, I would say I guess maybe to some extent we compete with some of the third party ownership providers. Although I think that like if you think about a Venn diagram, there probably is some overlap there. That we had a competitor called Orca Finance that we actually acquired recently. They weren't able to really finance their commercial loans effectively, and so we were able to buy that business. I think the biggest competitor is just lack of awareness from businesses. They just don't realize how good of a deal solar is. Penetration is just still very low. And again, property owners are not necessarily the most innovative folks. Like it's a passive investment. And so I think there's just a lot of inertia to do it. And so to your point, we, through our financing, can make it easier because our installer, when they sell, the owner doesn't have to say, oh, I have to go to my bank now, right? Because the financing is kind of like all embedded in the system. And I think like an analogy that I think about is cell towers. So going back 30 years, like nobody wanted them on their roof because it was like, oh, it's going to cause brain cancer. It's going to like fall off the building and impale a customer. And now look at every commercial property. What do they have? Sell stuff, right? And so I think just like residential solar, the more of this happens, like you get one property owner in Tulsa who goes solar with a loan. They tell their peers about it. Their peers do it, right? And then more people just start doing it in these local markets because commercial real estate is inherently local. Like it's property is usually owned by local individuals, and so we just need to kind of build those referral networks up. And so anything we can do either through financing or otherwise to make it easier for our partners to sell solar and reduce friction is our competitor.
Got it. And then what about your strategic partners and how do these partnerships impact your business?
Like our financing partners or?
Yeah, right.
Yeah, I mean, look, at the end of the day, like we need to have capital and flexible capital that understands the solar space to write loans. And we can't have the same approach that our bank partners would have for commercial real estate because it would just take too long. And so I think we've got great partners who we've educated about the value of solar, and in doing that, we've gotten them to agree to underwriting standards that actually work for our customers. Because again, like we're all about reducing friction. And so the way I view my business is we kind of sit in between financial institutions, solar installers, and business borrowers. And if we can build a process that works really well for all three of those folks, we'll be very successful doing it. And so, we need to have high approval rates, but we can't approve bad deals, right? And so it's like, how do you balance all those things is kind of what our job is. And so far, so good. but a lot of work ahead of us. I mean, we view this as a multi-billion-dollar a year opportunity within a huge TAM, and I think it's equally as big as the residential solar market. It's just harder to crack.
Got it. Got it. We have a couple more questions that come in from the line here. What are the dynamics with dealer fees today? And
So
then the second one is how. Oh, sorry. Go ahead.
No, go ahead. What's the second one?
The second one is how difficult has it been adapting a residential finance product to support commercial opportunities?
So the residential market is very historically low APRs, very high dealer fees. We do have dealer fees. They're not nearly as high as they are in residential. Our APRs tend to be a little bit higher because the commercial borrower is a little savvier. Like if you think about the residential solar space, where you have a one-call close, the whole reason for the dealer fee model is you want to have a rate that the consumer believes is attractive relative to what they could get at their local bank, so they don't have to go get a second quote, right? But it's for the same reason why when you walk into Best Buy, 0% financing for 12 months, right? So that makes sense in a one-call close model. In the commercial model, like no business is being one-call closed on $1 million solar system. So you still want to reduce friction, but you don't have to have that like as obvious good deal at the business boardroom table. But I think, look, like dealer fee models have gotten some flack recently, but if run properly and responsibly, like it's a well-known way of financing things that works. And so like our partners, like our partners that do residential solar get that model very well. For our partners who come from the commercial world and don't do resi and aren't familiar with dealer fee models, we have products with low or no dealer fees. So we can kind of have financing that works for everybody.
And another question came in. Can you talk about what went wrong with Sunrise and how you can fix it, and what's the competitive state of play in resi lending?
With Sunlight. So yeah, so I think the big issue with Sunlight is in the residential solar space, to do like Resi Solar 101, historically, most of the providers originated a loan from the customer on day one, and that loan was basically sold to a bank at that same price a few months later, usually credit unions. Right. Credit unions are the big buyers of loans from all the residential solar loan providers, Goodleap, Dividend, Mosaic, Sunlight. Those parties also had their own internal financing structures, and that would usually be you get a warehouse facility with a bank, you put that loan into a warehouse, you pull up a bunch of loans, the warehouse is a floating interest rate, right? You pull a bunch of loans up, and then you sell those loans to an insurance company or you securitize them in the market, right? And for a very long time, interest rates didn't rise. If anything, they dropped. I think so. Even though the rate was floating, it didn't really matter because it never floated up. And so what happened in residential solar, and this is not just something, this is all parties, bank liquidity dries up post SVB, right? So all banks, including credit unions, say, hey, we can't buy any more loans. We don't have the capacity to do it. Our deposits are down. Our loan to deposit ratios are off. Like, please stop. And so all the resi loan providers start putting more loans onto their warehouse facilities, right? The warehouse facilities are now floating rate, which again, never mattered until rates started rising at an unprecedented speed. So I originated a loan for James at his house at, making up a number, 5% yield. My warehouse is at 4%. By the time I aggregate enough loans in my warehouse to sell it, rates are at 7%. So I originated a loan at 5% and I sold it at 7%. So I just lost money on that loan. And I just lost money on every loan I originated for the past 6 to 9 months. And so you had these massive embedded losses, even though the underlying asset actually performed pretty well. Like the performance, if you look at the performance of the actual loans themselves, they're quite good. They were just all mispriced. And so, that crushed Sunlight. And so I think we've done a lot, and it's peers. So we've done a lot to kind of increase risk management, and kind of change how we finance loans on the back end. I think another thing that hurt the industry is there's too many installers who just suck, right? They're out there selling all kinds of things. You can look at Pink Energy and a bunch of other folks who sold solar and just weren't able to install it, and that led to a lot of losses and rising customer defaults. And so we're kind of getting back to the basics of making sure we partner with the right installers and have the right terms and conditions. Like we're not going to do anything just to grow. And I think the industry got a little bit ahead of itself, and I think you'll see a little bit of a retrenchment. But I think with the right structure and the right partners, I'm a huge believer in the residential solar space. I think underlying customers love it. You can read articles in Time Magazine or whatever about how residential solar is going to end. It's honestly, I mean, you have
Yep.
5 million customers who've gone solar, and there's probably 100,000 that don't like it. Oh, okay. How many people got new windows last year and like it, right? Like it's like any other industry, there's
Right.
gonna be people who are unhappy. It's just a really fun story to pick on solar right now. So I think as an industry we can do better, but I think a lot of like the media coverage is pretty overblown.
Yep, I think so too. Another one came in from the line. This is the most engaged audience we've had in a long time.
Nice.
Why is yeah, why is Cross River so large in the solar space? And what do they do with the loans, selling to credit unions? What sort of spread do they make, if you know?
I mean, well, I partnered with Cross River. I don't work there, so I don't want to speak to them. I mean, so Cross River was Sunlight's first bank partner in 2015. So it's just a long-standing relationship, and I think that they had some expertise in a space that for many years was quite good, and I think could still be quite good. So they have an insight into the space that a lot of other banks don't. I mean, if you go back in time, like there's a big solar finance conference next week in InfoCast. If anyone's there and wants to meet, I'll be there. Shoot me an email. When I went to my first InfoCast in 2009, there was like 200 people there, and like no banks wanted to touch solar, right? And now there's going to be 4,000 people, and like every big bank in the world will have 20 people there. So it's just a much
Right.
different industry than it used to be. And I think, but for people who were in early, they have relationships, they have expertise that a lot of these new folks do. I don't want to speak to yields, but like you can maybe look at like a Dividend, which is part of Fifth Third now. They're a public company. Maybe in their reported financials, you get into it. But if priced right, it's a good yielding asset that performs well.
Right, right. And then a follow-up on the Sunlight conversation. Why were they the only one that was hit, or are they the only one that's hit? I guess, and was it early default levels and loans are still in the warehouse? And if the problem is the duration of the warehouse, should this be a problem for the permanent or a permanent problem for lenders?
No, every single resi loan provider was hit equally and did the exact same things. Sunlight was just a public company, right? So as a public company, you have an obligation to report things on 8Ks when they happen. And so every time, when Pink Energy, for example, blew up and Sunlight lost money, they had to report it. Were they the only loan provider who lent money to Pink Energy? Absolutely not. Buy me a drink next week, I'll name names. And so everyone was doing the same thing, but they're all private companies, right? So they didn't have to disclose what was going on. Every single residential solar loan provider has had massive layoffs in the past 2 quarters. Again, something was public, so you might hear about it. So it was happening to everyone. You can get a little glimpse into Dividend because they're owned by Fifth Third, but again, it's a small part of the bank, so like that, I don't think it's broken out. So everyone was doing the same thing. I think Sunlight was the first to fix it through the bankruptcy process. I think you'll see others potentially do similar things in the future. And so, but again, love the space. Very excited about the opportunity. The new CEO, Tim Parsons, is going to be great. And we think there's an opportunity to build it back. So if you're a residential company, you want to partner with us, reach out. I'll get you to the right place. We'll be happy to help.
Well, last question for me, Josh, and then I'll let you get back to your day job here. Can you share some of the kind of key milestones that you're looking at for the company and the goals of the next 12 to 24 months?
Yeah, so for us, it's getting to 1,000 installation partners. That's about a doubling. We want to get to $250 million of loans funded in the next 2 years, and we want to continue to onboard more bank partners. So those are the big things for us. And obviously, we want to keep our loan performance great. We have 0 defaults in our portfolio to date. Not going to knock on some wood. Very proud of that. But we've got a bunch of great borrowers who run great businesses who we're helping save money. And I think the thing that I'm most excited about at Sunstone is, we have 42 employees today that didn't have jobs at Sunstone 2 years ago. But the more we can help our installers sell commercial solar, that's the more installers and salespeople and project managers that they need to hire in all these different jurisdictions, right? And then if we can help businesses save money, maybe they can use those savings to hire more employees for their business. And so maybe, Josh, instead of having 1 tire and auto shop, one day can have 2 because of his savings from solar. And so like we're really helping grow a segment of the industry that has lagged behind resi, large commercial, and utility scale to date. And so for me, this is kind of like the last untapped frontier. And I'm very excited to kind of prove it out that it works.
Great. Josh, Always good to chat. Thanks for joining us today and lending your time. We look forward to catching up again in the future, and we'll be watching the progress. Thanks so much.
Thanks so much for having me. I really enjoyed it.